Hi traders. Using a bond yield spread can be a very helpful tool in choosing a high probability currency pair to trade. Now in this video, I'm going to outline to you what a bond yield spread is. I'm going to show you how you use it, and I'm also going to give you an example from the Australian dollar, New Zealand dollar currency pair and how you could have used the bond yield spread in your trading and how I've used the bond yield spread in my trading of that pair. So it seemed a very natural currency pair to look at, and we're going to look at that bond yield spread now. So I hope this helps you understand how this is a tool that you can use in your trading and help you choose that high probability currency pair to trade. In this video, I'm just going to outline how you use a bond yield spread in your trading. And as mentioned, we're going to be looking at the Australian dollar, New Zealand dollar currency pair. Now, first of all, let me explain what the bond yield spread is. Now, the bond yield spread can be basically used as a risk profile between two different nations. So let me give you an example here. In the Australian dollar and New Zealand dollar currency pair, we now have the bond yield spread that's turned up in yellow. I'm just going to change that so it's a more attractive color and it's different to the candlestick chart, so it just stands out more. So what you can see at an immediate glance is that the bond yield spread is a very reliable indicator of where the price is going to go. So you can see here that as the bond yield spread moved lower, the Australian dollar, New Zealand dollar pair moved lower. So the bond yield spread kind of gives you a risk profile between two different nations. So in this instance, it's the nation of Australia and the nation of New Zealand. And the bond yield spread tells you which country is looking more likely to raise interest rates than the other. So when you can see New Zealand is more likely to raise interest rates, we see the bond yield spread move lower, and the Australian New Zealand dollar pair moves lower as the New Zealand dollar strengthens. But then when Australia is expected to be more likely to raise interest rates, we can see the bond yield spread moves higher. So you can see at current prices, the bond yield spread is indicating that the Australian dollar, New Zealand dollar currency pair is likely to move lower. Why? Because the bond yield spread is trending lower. Now, in the current fundamentals, that makes sense. Australia is about to have their central bank meeting next week. We have seen an increase of over 50% of Australia is now in COVID-19 lockdowns. This means that the RBA is less likely to be more optimistic. So despite having a really good jobs report this month, the increased lockdowns, the spread of the Delta variant, including China-Australia trade tensions, means that yes, the outlook may very well be more bleak for Australia than it is for New Zealand, hence the bond yield spread dropping lower. So we can see that in all probabilities, it looks likely that the Australian New Zealand dollar pair is dropping lower into that key support level. So the bond yield spread can just give you one extra tool to let you know what expectations are from the bond market for currencies. And you see bond traders, just like currency traders, are very sensitive to interest rate hikes and interest rate cuts. That's why the bond yield spread is a tool that you should use in your trading and can really help you identify the high probability directional trades. I hope this video has helped. If you would like some more help in how to plot the bond yield spread, how to put them onto charts, and how to use them in your trading, please do come along to one of my webinars on a Monday and ask a question, and I'll be very happy to assist you in using bond yield spreads in your trading.